Welcome, guys. Thanks for joining today. I'm Hannah Perkey, CEO of Evelo Team, and I have Bob Horner, Senior Realtor from our team, back for our monthly real estate market update. So hope you guys are enjoying fall break if you're traveling and want to give you some updates on the real estate market. So we'll jump right in. So we're looking at September. Our data always comes out a couple weeks after the month ends. So Bob, if you can tell me what happened in the local housing market in September.
Absolutely. So we have a pretty good track record here of what information we're looking to share each month. So pretty similar today. Over the past couple of months, we started taking a longer look instead of just looking month over month and year over year. I kind of started pulling things over this 5-year sliding chart. I think that's important because people are curious how quickly the market might change or what might be coming, right? And I think this is a real good indication of where things might be today and where they might be headed in the short term. So the first slide up is our median sales price. So probably doesn't come as a surprise to anyone, but we've gone up again, just a little bit month over month in terms of that 0.4% change there to 254,062. But that does put us up 13% year over year. Last October, we were at 225. So that's pretty significant difference. Generally speaking, in the good years in our market, we've more traditionally seen 3 to 4% increases in those median home values. So we're still exponentially greater than that. And then this next one up is the cumulative days on market. Our data providers switched this up a little bit on me. I kind of had to figure it out this morning. They've kind of put two trend lines in here now. They have an average days on market and a median days on market. So it looks like they're going to start comparing more of that median days on market in terms of percentage increase or decrease. Just know that that continues to be really low. The 6 number that you see there is the lower blue line, and that's the median days on market. And then the average current days on market, the line right above it there is at about 19. So still well under a month, still at all-time lows on that front. Next up is that inventory or absorption rate. And so we have pretty consistently stayed between a 0.5 and a 0.9 month supply of inventory dating back to early 2020. So we have another month here of 0.7 month supply of inventory, which is down 15% year over year. So inventory is still really low, less than a month supply, balanced market being a 5 to 7 month supply of inventory. And then this last one here is just the average list to sales price ratio. So we've seen this go down just a little bit from last month with an average of 100.5% received. But that is still up. Last year at this time, we were at 99%. So still strong results overall.
Yeah, that's crazy. So the inventory piece sticks out to me so much because we can see now it's been over 12 months of
I'm going to keep rolling because it looks like Hannah's frozen up on us. So the next piece that we like to take a look at is just what does that 0.7 month supply of inventory look like? And one of the things we've been doing each month for that is kind of looking at 5 of our northern suburbs. We happen to do a large amount of business in those areas. And what's a little surprising to me is the numbers there keep dwindling. So across these 5 suburbs, there are just 237 active listings as of today. And then even kind of more shocking is just 9 listings that are under $250,000 overall. So in 2020, once we dropped under 500, we thought that was a relatively incredible number, but to be down to 237 now, that just really shows what that 0.7 month supply of inventory is.
Can you hear me now?
Yeah, we got Hannah back.
That's how you guys know we're really live right there. Internet cut out. All right, awesome. So
yeah, so next up, I just talk a little bit about the interest rates and where they're at. Similar to the other chart where we started graphing back 5 years, I started doing that with the interest rates a couple months back as well. So you will see there has been an uptick. You can see each one of the 30, 15, arms and fixed rates here, right? They have been slightly increasing. So we're up about 0.15 over this time last month, and we've crossed that 3% threshold on average for the first time in a bit. So as we've been indicating, there certainly was the expectation that interest rates would continue to rise through the end of 2021 and into 2022. And the chart that we like to share here is just what does that mean from a purchasing power standpoint, right? I know that some people have indicated, hey, we're going to wait and see if the sales prices start to soften up a bit and continue on a little bit less of an increase. The challenge with that is home prices, at least in the foreseeable future, are still predicted to increase as our interest rate. So I'll just take a round number here, this $300,000 number. We're now just a tick over 3%. Principal and interest payment on that would be $1,265. If we jump another percentage point in the next year, that's going to take that payment for that same house almost up to $1,432, which is almost $200 more a month. So there really is some value in looking now if you are needing to move or wanting to purchase for the first time. Because if interest rates increases and prices increase, you're ultimately going to pay more tomorrow than what you will pay today.
Well, I think that's the interesting conversation. We were talking with one of our preferred lenders the other day. And so Bob says, yeah, if the interest rate goes up on that $300,000 house, but if home prices go up, let's say 10% over the next 12 months, which I think we're predicting a pretty steady increase over the next 12, that's a $330 house or $330,000 house. So just something to think about if you guys are saying, hey, we're going to wait, we're going to save, another 10,000 over the next 12 months. That might not be the best option. So we can kind of walk you through, or the lender can, those scenarios, but I think it's great to be aware of the information Bob's sharing and how that impacts your timing. All right. So then what about new construction? What are the latest numbers there?
Yeah, so the new construction seems to always be hit or miss. Each month we do this, their numbers kind of sometimes come out at different times of the month, but the bottom line is the one way that you can try to increase the supply when supply is low is to build new, right? So they have not released the September permit numbers yet. So this is still for August, where they were down a little bit in August, but still up 34% year over year. I think that we might continue to see something similar to that. I think in large part, every available lot that could be built on had a permit issued to be built on, right? And now the builders are kind of playing catch up a little bit with their land development so that they can get into the next phase of building. So I wouldn't be too surprised. I think those overall permit numbers are still probably going to be up well into the double digits, but we might see some months here and there where for that particular month, year over year, it may be down as the builders work to develop that raw land and get it into a position where they can build homes.
Yeah, for sure. Okay. All right. Great info today. Any final thoughts that you want to leave us with?
Yeah, I always try to end with something. I know that perhaps some buyers have been frustrated from the market over the last year. At the end of the day, there is good news for buyers and good news for sellers, both, right? And I think the good news for buyers is that even at the 3% interest rate, which is just a tiny bit higher than the graph that's on here, that is still a very historically low level. If your parents or grandparents may have owned a home in the 70s or 80s, ask them about what their interest rate was. It would have been probably somewhere between 12 and 18%. So that keeps your, monthly housing expenses at a fixed rate low for a very long period of time. And then kind of right next to this, if you're still renting, that median monthly rent payment is increasing at a far greater rate in the United States than what it is from a purchase standpoint. So, you purchase a home with a 30-year fixed loan, that principal and interest amount stays the same that entire 30 years or however long you live there, versus rent that's going to continue to increase at a similar pace as home prices are increasing through that same period of time. And then obviously the good news for sellers, historically low days on market, multiple offers per listing, and historically high median sales prices. So if you were ever interested in a time where you might be able to capitalize the most on the equity that you have built in your home to downsize, upsize, right size, move to a beach, move to the mountains, whatever the case may be, today is definitely a good time to consider exploring that.
Yeah, awesome. Well, thanks. I love that graphic. That's really cool to think through what that looks like on both sides. So, all right, guys. Well, that is our quick update. We always try and keep it within 10 minutes so you can watch it on the go and get what you need. So, we appreciate you joining us today. If you have any additional questions, you can reach out to us at 317-863-9011. You can call or text that number anytime, or info@eveloteam.com. We appreciate it, and we hope you have a great rest of the day. Bye-bye.